Good morning. It's Monday, May 17th, and I'm Kenny Polcari, and this is Host of the Party, Morning Market Commentary, everything you need to know to get your day started. And it's Monday. It's going to be another exciting week, starting with Elon Musk tweeting about Bitcoin over the weekend, the FOMC on Wednesday coming out with their FOMC minutes from April, so it's going to be very, very interesting to see what happens. But let's talk about it. Friday's rally, though, this morning appears to be fading, right? The FOMC minutes, like I said, are due out on Wednesday, and all investor eyes are going to be concentrated. Inflation is becoming more of an issue, right? It's much more top of mind. Investors are nervous, even while the Fed says that they're staying the course. Look, you should buy the Barron's this weekend, right? This weekend's copy of the Barron's, it's headlined with the big I word. And in this case, it's not iPhones, iPads, and iWatches. It's the inflation explosion, page 22. And for no other reason, look, nobody's ever 100% right. I get it. But you should read this article. It is well written, it is well researched, and it will at least cause you to think about the current situation and whether or not maybe, just maybe, the Fed and Jay Powell are on the wrong side of history. But we'll get to that, right? Like I said, Lonnie Musk tweets about Bitcoin last night, actually in response to a tweet about the Tesla Bitcoin position, and he retweets an answer causing all kinds of confusion. Bitcoin plunges by 12% overnight, trading down to $44,000 before it found some stability. And after he came out at 2 o'clock this morning, clarifying the fact that Tesla has not sold supposedly any of their position. Now, what's interesting is he qualified it by saying Tesla hasn't sold anything. He said nothing about his own position, but to be fair, the original tweet was not questioning his position, it was questioning Tesla's position. So there continues to be turmoil around the cryptocurrencies, and that's dragging them all lower. This morning, the 10-year Treasury is holding tight. Oil's up small. The dollar declines. And what are we having for dinner? We're having linguine with artichoke and pancetta in a white wine sauce. It is delicious, right? So, like I said, stocks rally hard on Friday, seemingly oblivious to all this building pressure around the Fed about everything we know. Rising rates and rising prices and stretch valuations, and the realization that the taper conversation may not be able to wait until the summer of 2023. And the rally on Friday was equivalent to the sell-off on Wednesday, right? That plus or minus 2%. So we lost 2% on Wednesday, we gained it back on Friday. But the sell-off and the repricing that's been happening since the February highs just suggests that traders and investors are uncomfortable with inflation, and they're uncomfortable with the most recent inflation prints that we've seen, suggesting that, yes, these valuations are stretched and there needs to be a repricing. And we're seeing that happen, right? We're seeing it happen rolling. Certainly we've seen it happen in parts of the tech industry, but not all the tech industry, because look, tech is more than just the 5 big FANG stocks. So while there's certainly a place in your portfolio for tech, you have to understand which tech, where do you want to be in the tech space. And so that takes some work, right? So you should talk to your advisor and or anyone else that's kind of giving you advice on where to be in the tech space. One way or the other, by the end of the day, the Dow added 360 points or 1%. The S&P was up. The S&P was up 61 points or 1.5%. The Nasdaq up 305 points and 2.5%, and the Russell up 54 points, also up 2.5%. Eco data on Friday was mixed. Advanced retail sales missed all the estimates, much like some of the other recent data points we've seen, right? The month-over-month expectation of plus 1% came in at 0%, not good. Ex-autos and gas was negative 0.8% versus the expected plus 0.3%, again, not good. Import prices were up. Industrial production was off a little bit. Capacity utilization was in line. And the one-year inflation estimate, which is, here's what's concerning, is now up at 3.1%, up from what was last month, 2.7%. And the 3 to 5 year inflation forecast, which again, I think is a hard metric to really base your investing on, but everyone's talking about it, so you have to throw it out there. The 5 to 10 year estimate is now 3.1%, up from 2.7%, which it had been for a number of months. Suddenly it has shot higher, and so that is something. It's a little bit of a mixed bag, but it is something just to keep in the back of your mind. Look, in terms of the earnings season, we're basically done. We're about 93% through the earnings season. And out of that, 86% of companies that reported have beat on almost every metric, top line, bottom line, and all the lines in between. We've got a couple left. On Tuesday, we're going to hear from Walmart and Home Depot and Macy's. On Thursdays, we're going to hear from Target and Lowe's. And as investors go all in on Friday the way they did, what you saw was the VIX back off, and that makes perfect sense, right? The VIX is a fear index, so it reacts in the opposite fashion. You're never going to see the VIX go up when prices are rising, or you'll never see the VIX go down when prices are falling. It's nonsensical, right? One offsets the other. So as prices rise and people get less fearful, then the VIX will fall. As prices fall and people become more fearful, the VIX will rise. And you saw that. It spiked higher on Wednesday as prices were falling. Yet on Friday, as they took the market back, the VIX fell 18%, right? It's back down at 1850 or 50-ish, right? But look, again, this whole inflation story is really at the top of the agenda. And if you read that article in Barron's, you'll understand it better. But there are things like, here's the rub. While the Fed has remained consistent in their view that this is just transitory, that there's absolutely nothing to worry about, that these rising prices are a figment of your imagination. When you read the story, you'll understand that business owners are experiencing something very different, and that some industries will no longer guarantee prices when you order something. They will guarantee the price when it's actually delivered to you, which could be very different than the price it was when you were going in to order it. And that's not that is absolutely clear in the lumber industry, right? The lumber industry will no longer guarantee you a price when you go in and order what you need. Prices are up 300% in 12 months. They're moving all over the place. And so the quote in this article from lumber suppliers is that they price upon delivery, and those numbers could be very different than what you thought they were when you went to order, right? So then you want to talk about another reason housing prices are skyrocketing, because the cost of lumber just won't stop going down. And then, like I said, in this continuing saga over cryptocurrencies, on the Sunday night, someone on Twitter tweeted at Lonnie Musk, or tweeted about Tesla's position in Bitcoin, and how everyone's going to be surprised when we learn next month that Tesla no longer has a position in Bitcoin because they've been selling it all along. And Lonnie Musk replied with a very cryptic reply, just saying, indeed, sending Bitcoin into a frenzy, because no one really understood what did that mean. It was a cryptic message. Did he mean he agreed with it? Did he mean he doesn't agree with it? Was he questioning the guy? Was he not questioning the guy? One way or the other, Bitcoin falls by 12%, going from 50,000 to 44,000 before it found some stability. But it wasn't until 2 o'clock this morning, Monday morning, where Elon Musk came out and made a very clear statement that Tesla has not sold any of their Bitcoin. Period. The end. Now, as said, and I said at the beginning, he said nothing about Lonnie Musk's position in Bitcoin, but that was not what was in question in the tweet. So therefore, to be fair, he didn't have to say anything about his position. But it will be interesting to see if anyone can find out whether Lonnie Musk himself has sold any of the Bitcoin, maybe ahead of his pronouncement last week that Tesla was no longer going to accept Bitcoin, or thereafter. Remember what happened when he made that announcement about Tesla not accepting it. It also plunged in value. So the volatility there continues. Remember what I said, a couple of weeks ago about both Lonnie Musk or Chamath Palihapitiya or anyone else, any of these big billionaire guys that are in there making comments about Bitcoin or Ethereum or Dogecoin. They've got nothing to lose in this fight. Nothing. Zero, nothing. They are multi-billionaires. They got nothing to lose in this fight. Right? And they've got everything to gain, because they talk it up, they talk it down. They talk it up, they talk it down. And they know the comments that they make are going to create volatility in this asset. So they talk negatively, it falls. They talk positively, it rises. And so therefore, they've got nothing to lose in this game. But you, as an investor, have a lot to lose in this game. Because if you're just buying or selling Bitcoin or Dogecoin on a Musk tweet or a Palihapitiya tweet, then you shouldn't be in it, right? That's not why you should be in it. You shouldn't be in it just because they're in it. If it's true what the research tells you, it should make no difference what either one or any one of them says. It will do what it's due. Bitcoin's success or failure is not going to depend on what Elon Musk or Chamath Palihapitiya or anyone else for that matter, tweets about it or says about it. You either believe in the technology or you don't. period, the end. But you have to have a strong stomach along the way, because clearly the volatility will continue to increase as we move ahead, and that's clear by what we saw over the last couple of weeks and what we saw last night. Eco data includes the Empire State Manufacturing. The expectation is 24, just a bit below last month. But on Tuesday, we're going to get housing starts. Those are expected to be down 2%. And on Wednesday, we're going to get the FOMC minutes, like I said. And it's going to detail exactly what the FOMC, what the Fed members are thinking about monetary policy, about inflation, about the taper conversation, and about how I'm sure what it's going to come out is going to say that some of us are overreacting, and that they remain committed to low rates, and they remain committed to their bond purchases for the foreseeable future. So therefore, everyone back off, right? U.S. futures, which were up early Sunday night, right after they started trading 6 o'clock, have now turned south, right? They really were up most of the night, but now early this morning, they started to turn negative. And as of right now, we got Dow futures off 160, the S&Ps are off 20, NASDAQ's off 80, the Russell's off 20, tech and energy are under pressure, and that's taking the broad market and the futures lower, right? The 10-year is holding steady at 1.61%. The dollar index is off about 4 cents at 90.28, seemingly about to test the May lows of 90.15, where it should find some support. The ongoing concerns about what the Fed might have to do to stop inflation from spinning out of control continues to weigh on investors and traders and algos' mind, which is why Wednesday's FOMC minutes are going to be the key data point this week. Everyone, analysts, strategists, economists are going to tear it apart. They're going to be looking for any clue that that might be hidden between the lines concerning rising price pressures, what the Fed thinks about those rising price pressures, and any hint that they're going to start to think about tapering in 2021, when they told us this wasn't happening until rates were going to stay low and bond purchases were going to remain accommodative through 2023. So it's going to be a very, very interesting week, and one that could create lots of volatility. Because the market's clearly on the edge when it comes to inflation and expectations. Look, over the weekend, Cleveland Fed President Loretta Mester said that the Fed's policy is, quote, a good place, and that the data will be volatile as the economy reopens. She's jawboning. She's doing more jawboning, trying to talk people off the ledge, suggesting that, yes, it may be volatile, but the Fed stands pat with their analysis that this is just transitory and people need to be prepared for that. Later on in the week, you're going to get Fed Vice Chair Richie Clarida and Atlanta's Rafi Bostic, all also due to speak. And both of them are in the same camp as Loretta Mester, so expect more jawboning as they also try to talk investors off the ledge, right? Certainly after, because I think they're going to speak after the FOMC minutes, so I don't think they come out to speak until Thursday. Asian markets were mixed overnight. European markets are all lower this morning. Rising inflation and a small uptick in the Indian variant of COVID cases is causing some nervousness there in European markets. The UK is just starting to reopen now. They're trying to get the country going. Air travel is restarting, yet Boris Johnson does warn the country that the spread of this latest Indian variant may cause a slowdown in the pace at which the country reopens. Oil's trading back above $65 a barrel, right? As the Colonial Pipeline drama is all but over, right? So all those states along the East Coast that were feeling the pressure and shortages of gas, that's no longer an issue. The outbreak of war in the Mideast between Israel and Hamas continues to surge, and that may cause prices to spike as well as the fighting continues and oil remains at risk. Oil supplies remain at risk. Right? Overall, though, global demand is strong. You know how I feel about it. And it's going to continue to be strong, especially as we move into the summer driving season and Americans return to the air, the rails, and the roads, right? It's going to happen. Oil remains in the $65 to $70 range right now. And like I said, I suspect that we could actually see oil approach 70 by 4th of July. Bitcoin's trading at 45,500. Ethereum is trading at 3,500. Dogecoin's trading at 50 cents. You can thank Elon Musk and all the tweets going back and forth for the weakness across the board in the cryptos today. But we're going to see, because expect that to be part of the conversation as the day goes on. The S&P closed at 4173 on Friday. And while I thought we were going to hit resistance at 4150, I did say they could possibly take it to 4180, which is exactly what they did, and they closed it closer at 4173, certainly closer to the 4180 level. This morning futures are weak, right? But they're not convincingly weak. They're backing off, but they're not falling out of bed, or at least not yet. And so it just feels like it's going to churn, maybe trade back down to 4150-ish. If it doesn't hold at 4150, if it does not hold at 4150, could we see it spin out of control and test the lows of last week, which is actually the 50-day moving average at 4,065? We absolutely could. Do I think it's going to happen today? No. Do I think it could happen Tuesday or Wednesday as the anticipation grows over the FOMC? I think it could, because I think people are tired of hearing that the inflation is just transitory, that the inflation is not an issue, that there's nothing to worry about, that it's all a figment of your imagination. I think they're tired of hearing that, and so therefore I think the markets could get a little bit more antsy. And the Colonial Pipeline issue about critical infrastructure being prone to these sophisticated cyber attacks is alive and well. And look, and just don't think it's about the pipeline, the nation's largest pipeline, which is what they crippled last week, right? It's about the electric grid. It's about water supply. It's about financial services. It's about exchanges. It's about banks. Think of it, it's about every industry really across the board, which is why the cybersecurity sector within technology is a place that maybe you want to look to and allocate some money. And if you're not familiar with it, you can look at the HACK ETF, HACK, it's the ETF, that is the cybersecurity ETF. So it gives you some broad exposure if you want to play in that space. Look, you know what you can do? You can text the word INVEST to 21,000 to download my digital business card. Feel free to download it. Feel free to reach out. Send me an email. Send me a text message. I'm always happy to talk about it and help you discuss the markets or even a plan. So what's for dinner tonight? Oh, this is so good, and it's simple to make, but yet it's always a crowd pleaser. It's linguine with artichokes and pancetta and kind of a white wine and a white wine sauce. It's got a splash of lemon juice in it, but it's delicious. It's perfect. It's light. It's a great summer dish. You can cook it, invite your friends over, eat out on the deck in the backyard. It's perfect, right? So what you need 8 small artichoke hearts, right? You just buy them frozen. They're just easier. You just buy the frozen artichokes. Let them thaw first before you use them. So take them out and let them thaw. Because after they thaw, you're gonna cut them into pieces, right? You need olive oil. You need a big white Spanish onion. You need 2 or 3 cloves of garlic. You need pancetta, right? You can buy the little cube pancetta in the grocery store. It comes already packaged. It's already cut up. And if it doesn't, just buy it at the meat counter, and then just take it home and dice it up, right? You want to dice it up into little bite-sized pieces. You need a dry white wine. You know me, I use Pinot Grigio Santa Margherita, salt and pepper. You need chopped fresh parsley. You need a pound of linguine. You need just fresh lemon juice, but you're only going to use a splash, not the whole lemon, but you want fresh lemon juice. And of course you want fresh grated Parmigiana cheese, right? So you start by always bringing a pot of salted water to a rolling boil on the back burner. Just get it going, get it started, so that when you need to boil your pasta, it's ready to go. In a bigger saute pan, again, one that will accommodate the pasta when it's done cooking, you're going to go around the pot a couple of times, 2 or 3 times with the olive oil, and then turn the heat up to medium high, get the oil hot. Add the chopped onion, right? Don't dice the onion. Again, I would cut it in half and then cut it in those half moons, and then put it in the pan and saute them around. You want the onion, once again, to get nice and soft. Add the pancetta after the onion gets soft, maybe 5 or 6 minutes. Add the pancetta. You can add the whole carton. It's not a lot, but you add the whole thing of pancetta and saute that around with the onions, right? Because you want the pancetta to cook as well. You keep it on medium high. Don't let it burn. Don't walk away. Sit there and just keep moving it around. Maybe another 8 minutes, 10 minutes like that. And now take the sliced garlic, right? And you put the sliced garlic there. So you've taken 2 or 3 cloves of garlic. You've sliced it nice and throw it in the pan. Saute it around. Give it a chance to kind of blend in with the onions and the pancetta. Nice. Now, you're going to add the artichokes. You've taken the artichokes that are thawed. You've kind of sliced them up. put them in the pan, saute them around just for a couple of minutes so that they get covered with the oil and the pancetta and the garlic, so it all starts to blend. Now, add some white wine. Again, I just kind of judge it. Maybe you're gonna add a cup of white wine, dry white wine. Pinot Grigio San Domingo. Don't use Chardonnay. Remember what I said. Do not use Chardonnay. And bring it to a boil. You're going to take the lemon, just make a fresh squeeze. So rub the lemon on the counter, cut it in half and just squeeze a little bit. Not a lot. You want just kind of a tang, right, of the lemon. So just squeeze a little bit, bring it to a boil, and then turn the heat down to simmer and kind of let some of the alcohol will burn away and the sauce will reduce, right? You want it to reduce by not so much half, maybe a quarter of it you want it to reduce by. That should cook for maybe 10 minutes. Season it with salt and pepper. Just taste it along the way. Make sure you don't overdo it. I always err on the side of underdoing it, and then I taste it. You can always add, right? And then toss in, once that's done, 10 minutes, then toss in the chopped parsley just to give it some more color, right? Some green color. In the meantime, you're going to cook the linguine. You're going to put it in the rolling pot. You're going to put it in the pot of water that you set up. Let it cook 8 minutes or so. Remember to taste it. You want it to be al dente. No more 8-9 minutes max. And now using your tongs, reach into the pot with the boiling water. Take the linguine out. Let it drain a little bit. Put it right into the pan with the artichokes and the white wine. Right? Do that until you've done all the pasta there. Toss it so that it's nice. If the pasta sucks up the wine sauce that's in the pan, take a mug full of water from the pot that you just boiled the pasta in and add a little bit slowly just to bring it back to life. Now, once it's nice and moist, you don't want it to be wet. You want it to be moist. Have a handful of grated Parmesan cheese. Toss it right on. Toss it together, mix it nice, serve it immediately into warm bowls. Always having more cheese on the table for your guests. You can serve that with the white wine you use to cook with because it's a great addition. Sit outside in the afternoon sun as the sun's going down. Put on some nice music and a glass of wine. Enjoy yourself. You can always you can make some garlic bread to eat with this. It's always delicious. You'll never go wrong. In any event, it's Monday. Get ready. The day's about to begin. I will see you in the morning.